Hi, good evening, everyone. Welcome back to the channel. So in this video, I have had a sudden realization. I have realized that with the market getting beat up and us being close to 52-week lows on some things, I've realized what better opportunity than now to be all in on YieldMax. So I thought about just going all in on it. I'm going to spend this video talking about that. So first, let me get things monetized here, and then we'll get going. So I kind of hammered Khmer a little bit yesterday, so lost some followers, which is to be expected. Um, but what I'm going to do in this video, I'm going to remind all of you all, because we have a lot of new viewers on the channel, so I'm going to remind all of you all my investment philosophy. And those of you that have followed me for a long time know that I would absolutely never be all in on YieldMax, so I wanted to make that clear. That's a joke in case some of you all took me seriously. Um, okay, let me just refresh here. This thing's delayed. So I guess we'll just keep this format going for a while because this format is working really well. So, okay, we will do the Discord live again, and I'm going to go over some accounts that I normally don't go over. So we'll start out here and we'll share Discord. So this pretty much picks up my whole screen. Um, okay, he wanted to know when we were starting. Okay, yeah, we're starting now. Took me a few minutes to get going here. Okay, so I am on the live chat now. But what I want to explain, for those of you that might or might not think that I am a YieldMax shill, um, and those of you that might think that I would ever be all in on YieldMax, that would never happen. So, to be clear, my investment philosophy, I would only ever allocate anything to something like this out of the 10% bucket. So I've always been a 90-10 investor. So 90% of my net worth is invested in pretty much solid, stable stuff, which I do consider long-term investing to be solid and stable. Um, so real estate is part of it. Long-term growth investing is part of it. I trade a lot of options, and the bucket that goes into like YieldMax and high yield dividend funds and stuff like that is less than 10%. It's probably more like 5% of the overall portfolio. But that's typically what I reserve for like, speculative plays. Um, Even like REITs and stuff like that, because there are some REITs and BDCs that behave very similarly to YieldMax, where they drop like 50% in value. So let's go over the most recent news today, and then let me pull up the live chat here. I'm gonna get this going here. Bear with me. News today. Okay, so let me just pop out the chat window so that we can see everybody's comments here, and then there we go. Yeah, I apologize. I'm not too good at like pre-prepping on this platform. This platform's still pretty new to me. So, all right, for the remainder of the video, we should have this. Now, I posted a poll, if you know, you know, but is duplicating content on two different channels allowed on YouTube? That's one of those things, if you know, you know, right? Okay, so Discord. We got new people coming into Discord every day. We got a new swing trader that we welcomed in. Oh, look who it is, Coffeeholic. You're such a nice guy. A super chat right out of the gate. Well, thank you, certainly. Okay, so let's go over the options trades thread. Heated up a little bit today. Looks like he's trading is at UiPath. Interesting. Let's see some of our other trades here. This is one of our top people here. This was last week, I believe. He hasn't updated us in a while, but he's still getting some decent premium. SMCI. But what I want to go over here, I rarely show this, but I want to show you all, for those that think that I might be a YieldMax shill, I want to show you all this account over here, which has been hit pretty hard, believe it or not, in the market. In the market downturn, this account has probably lost close to 100,000. This is my original 401k. So this account is in three funds. I don't believe in diversification like Warren Buffett. This is in S&P 500. As a giveaway, this is my old employer. It's in their common stock fund, and it's in large cap growth index. Now, why these funds? Because these have been performing the best for me over time. Um, as you see, over half of it is in this large cap growth index fund. I'm going to show you all some incredible returns. I'll go as far back as I can here. So if I go back 5 years, the average per year is 16% according to this. The way I calculate, I know there's a difference between, CAGR and just simple return, of course, but um, some years I've done like 30%. Now this is factoring in, of course, the 2022 downturn, which I consider to be worse than the 2020 downturn, but that's another story because 2020 came right back like within 6 months. Um, so cumulative, that's over 5 years. That's 109% return. Let me see how far back I can go here. For some reason, it doesn't let me go back too far. Let's see. Okay, we'll do a 6 year view. Oh, that's weird. It only goes back 5 years. Okay, well, there you go, folks. You see that over 5 years, it's 109% return. And I can tell you in the year 2020, the year 2021, the year 2023 and 24, I pretty much averaged 30% a year during those years. Now, 2022, I happen to be down probably 30%, so that muddled up these waters here. But regardless, this is one I hardly ever show, and this in addition to real estate and another one that I have, this is the bulk of things here for what you might call the THB empire. So contrary to what some believe, it's not all yield max. It's index funds, growth funds, long-term investing. Um, and I've always said that, I've never shifted. I've never been changing my story on that. I've always been the same when it comes to that. Okay, your question here. I don't want to say this is a good question because this is kind of you're misconceptualizing a little bit. This isn't a ticker. Okay, there's three funds I'm in. I actually don't know the tickers because they're through my previous employer. Whatever the large cap growth index fund is through here, that's the one I'm in. Now, funny enough, I started out in the target date funds, but I learned very quickly, probably when I was like 22 or 23. I was just having this conversation yesterday with a subscriber, actually on the live show. I learned very quickly that that wasn't sustainable because you're only getting like 8% a year. And then, of course, our common stock is very, very, it's a top performer until it got crushed this year. The last several years, it's been an absolute top performer. Sadly, I sold all of my employee stock to invest in other stuff, but wish I would have kept it because that was a top performing one. Believe it or not, half of it I got called out of on covered calls. And then, of course, the S&P 500 index fund. Now, to answer Coffeeholic's question here, what I was showing is the cumulative return over 5 years. So if you annualize the cumulative return, that's the basket of funds, which I balance in and out of. So when one starts doing better than the other one, I rebalance my account basically. So I was in some small caps a year ago, but the small caps were underperforming. So what do we do with underperforming players? We bench them. So that's what I did with that one. So I'm in like the best funds. Now, you may think this is a fault, some of you, but what I do when the market drops, I just basically write it out because I know it's always going to come back. The tough part about this account is because I don't work here. I don't work here anymore, so I'm not exactly contributing to this one anymore. In the past, I was dollar cost averaging in because I was contributing the maximum because like I've said, I've always maxed out my 401k. So what the number you were seeing, Coffeeholic, the 16%, that's the basket of funds annualized, cumulative 109%. So that's a much bigger chunk than YieldMax. Just saying. Okay, so I wanted to cover that. With that being said, I think I need to update you all on which YieldMax funds at this point would I actually own. Well, obviously I'm still holding the bag on Tesla when I bought in 2 years ago. Would I own that one if I had it all to do over again? Most likely not. Um, if I had to own more YieldMax now, the one I did buy, and I went over this yesterday. If we go to their website, the one that I did buy was the Biggie fund because I liked the concept of it. He says, "Do you have JEPQ in your portfolio?" I used to. I used to before I found higher yields, but someday I'm definitely going to add it back to a portfolio. I'm also a big fan. When I started as a dividend investor, I was a fan of the classic dividend stocks, Verizon, AT&T, Philip Morris, companies like that. Even some of the oil companies like Exxon and Chevron paid like 4 or 5% dividends. The thing with Philip Morris, just to sidetrack here for a second, the market is crazy, isn't it? I guess the Dow was up like 1600 this morning. We ended down 300 something. Absolutely insane. Okay, so let's look at some stable dividend stocks like Philip Morris. So for Philip Morris, because believe it or not, the stock has actually soared over the last year or so. So the yield, which used to be like 8%, has stayed flat. They haven't increased it. I call that, as for those of you that have followed me for a while, know I call that the dividend paradox. So when the dividend rate stays flat and the stock moves up or down, the dividend percentage is going to move inversely. So if the stock is dropping, the dividend percentage is going to increase. That's just how basic math works. Um, when the stock increases, the dividend yield percentage is going to drop. So that's what I call the dividend paradox. But ironically, Philip Morris, for being one of those stable dividend stocks, has increased like 65% over the past year. Some of the other ones I used to look at, companies like Verizon, which were never supposed to fluctuate in value. Um, so Verizon, it's the opposite of what I showed with Philip Morris because it did drop um, over the last couple of years. We're seeing a higher dividend percentage, but the actual dollar dividend has never changed. Over the past year, we've essentially been flat, but over 5 years, we used to trade in the $50 or $60 range, and we're down to 42. So, not sure exactly why stocks like Verizon dropped. Now, ironically, AT&T has been one of the best stocks this year. It's been rallying for the past year. In fact, it's been up 53%. Still flat over the past 5 years, but if we go back like 10 years ago, when I first bought AT&T, I first bought in 2017 when it was trading around 38, 39, or even $40 a share. Now, it never got back to where it was. Like in 2016, it was at like 43 a share. It never made its way back to there. It came close in late 2019, and then we had been on a downward spiral, but now we're just now starting to come back. For the year to date, even though we got beat up a little bit this year, we're still up 19%. Let's see what Jeff Nix has to say. He says they have been a better idea to short Biggie, at least up to the first distribution, since they always seem to drop off so dramatically after an issue. So I don't like to get into that where I short stuff or buy stuff on the ex-dividend date. I'm not that sophisticated of a dividend investor. I just like to take dividends and use them to buy other stuff, basically. I call it the dividend wheel strategy. Coffeeholic says my goal is once I'm making at least 15,000 in monthly dividends. So you still subscribe to the Kumair mindset where you're going to make like up to 30,000 in dividends. You'll start buying AT&T, Verizon, Costco, JEPQ, Nvidia, S&P 500, Nasdaq, and a bunch of other stable funds. Can I give you some unsolicited feedback here, Coffeeholic? I don't want to call this advice because, like I've said, not one time in the history of this channel have I ever told anyone what to buy or what not to do. But I can provide some suggestions, okay? If you're going to wait for that, I don't see why you wouldn't just go buy, like right now, stocks like Nvidia, I think have been beat up so significantly. They're trading very close to their intrinsic value. So 96.30, we've fallen all the way from 145. Um, so to get back to where we were, which I strongly believe we will, could be wrong, but I strongly believe Nvidia will get back to where it was. I'm very bullish on it, even if I don't always pronounce it correctly. Uh, I would factor in possibly a 51% upside. Okay, so since we're at peaked out, January 6th, one of our favorite days, um, it's a 36% drop. So remember, when you're looking to buy something, when you're trying to figure out what your timetable to recovery is, if something drops 36%, whatever amount something drops by, it needs to increase by an even higher percentage to get back to where it was. So, like if something's $5 a share and it drops to $4 a share, That's a 20% drop, right? But in order to get back to $5 a share, that's then going to be like a 25% return that you're going to require. You see how that works? It's just math, people. It really is. Um, NVDY is one I've never touched. A lot of you have, but that's one I would rather buy the underlying. So what I want to illustrate to Coffeeholic here, okay? If you're waiting on, say you're like eMesa here, and you're wanting to buy NVDY, um, here's what's going to happen, okay? And again, this isn't trying to dissuade or persuade. By the way, thank you for the tips. One that you gave in the beginning of the video. Greatly appreciated. Tips are always appreciated, whether they're given or taken, right? Okay, so what I want to illustrate here over the past year, NVIDIA is up 12% in price return, NVDY is down 48%. That's because it pays such a high dividend. Now you can see on the charts, you see a similar line pattern, but you see a widening C between the two. The gap is widening. So if you're waiting because you're saying, hey, NVDY is the hot stock, that one's the one that's really going to soar. Well, you're going to miss out on, like, if we just go back 5 years, I'm not saying NVIDIA is going to do this over the next 5 years, but look at that. That's a 1,408% return over the past 5 years. So even if we just compare apples to apples, okay, NVDY has been out since what, 2023? What was it, May? Oh, it's almost 2 years old. Okay, so let's do an apples to apples here. Let's do 2023, um, May 9th, and then go all the way to today, April 8th. Okay, so here's the thing, coffee. So you're looking at a 242% missed opportunity here for NVIDIA when you opted for that $15,000 annual yield with NVDY. So you can, I mean, if you really are looking for quick income, I can see the argument where, hey, let me buy into these and then it's producing the income for me. And then I can go buy these other funds because not everybody starts out rich. Not everybody obviously gets handouts from whoever. Not everybody's like a trust fund baby. A lot of us, you know, I've heard, I guess I won't name any names, but you all know who said this. Like, uh, I'll just say this. It's not a flex to say you started out at zero is not a flex at all because for the most part, I'd say 90% of us started out at zero, including me. Um, so even if you do the total return, which is funny because NVIDIA does pay a small dividend, but it's very small. So if you do, no, that's weird. Total return. Oh, I lost my chart. I have to start over. Okay. NVDY. Sometimes it gives me a headache trying to educate all of you all and not especially trying to get you all to not be irrational with these dividends. Okay, so May 9th to present day. Here we go. It's almost 2 years old. April 8th. Okay, so total return for NVDY is not bad. 122%. Can't complain about that at all. That's a phenomenal return. But its underlying has doubled what it did. Just throwing that out there. The underlying growth stock, the same amount of money invested, $10,000 over the same time frame, is $24,200. Whereas for NVDY, hold on a second, am I correct in that assessment in there? No, I'm sorry. I'm not doing that right. That would be 100% is doubling, 200% is tripling. So you're talking, it would be, shoot, why am I drawing a blank here? It's a factor of 3.42. So it'd be 34,200. Whereas NVDY, this would be 2.2171. So you would have 22,171 here. You're talking at least $10,000 more dollars. When we talk about free money, like we say, dividends are not free money, but that extra gap there by basically picking funds, that is kind of like free money. That's the magic of compound interest. So, okay, we've had a question come up here from Lance Pittock. Thoughts on MSTY? Let's go look at it. You know it's going to be the same thing. You know the underlying is going to be MSTR, and I had some MSTR. I got called out of it. So MSTY has been tanking. Of course, they go along with the underlying, but they seem to capture all of the upside with limited, I mean, I'm sorry, they capture all of the downside with limited upside. So these are kind of designed to drop, which makes it kind of silly to buy these on margin because you're paying an interest rate on top of it on a product that's basically designed to drop over time. Okay, so MSTY today, down another 10%, so it got killed. I'm assuming the underlying MSTR got killed as well. So MicroStrategy was down more. So MSTY did slightly outperform the underlying today, which sometimes that does happen with these YieldMax funds. I would say, and I'm not trying to stir anyone any direction, but I would say Curve is doing a pretty dang good job with these. Um, it seems to be higher yields and lower NAV erosion. And then Yield Boost, we've got Yield Boost out there, which is very intriguing. I'm keeping a close eye on those. But this one, okay, so we were down 11% here, whereas its YieldMax counterpart was only down like 10%. So let's do this one. Let's put in MSTY and update this over here. So see, they've almost moved in opposite directions over the same time since last year. We'll just go for this past year. If we do total return, the holy grail of investing, right? Total return. Um, okay, it's 31%, but it's lower than MSTR. So I 100% because like I said, I'm in the middle. Sometimes being in the middle is the most dangerous spot to be in because you get people pissed off at you from both sides. And that's what I've got right now. I've got people that are Kumair's fans that are unsubscribing because they don't like what I'm saying. And then I've got people way over here that are saying, "Oh, you're a YieldMax pumper," that are criticizing me. So being in the middle tends to get you flack from both sides. But with this being said, I 100% understand the argument that why would you buy something like Misty? Okay, you're getting a good return, but you're paying an expense ratio for a lesser return than the underlying. And what they're doing, you're getting your dividend paid to you, which is then taxable because it's a non-qualified dividend. So your dividend is taxable, and then you're getting a return that's taxable that's lesser than the underlying. So it's 100% tax inefficient. It does less than its underlying, and you're paying more money in terms of expense ratio. So I'm just the messenger here. I'm not telling you what to do or what not to do, but I get it. Short term income is very appealing. Dividends are very sexy on paper. So, but I've always found, other than maybe in the case of XDTE, I've always found that the underlying outperforms. So XDTE, let's go look at that one. XDTE versus the SPY. We'll go look at that one. I spy the SPY. Okay, someone told me that XDTE was outperforming. It's very close. The price return right now is very close. Down 16 versus down 15. See, over 6 months, it's definitely worse. Now, if we do total return, um, yeah, in terms of total return, it is outperforming. So there's a rare example. There's a diamond in the rough right there. XTTE by Roundhill is outperforming the S&P 500. Um, they were almost exactly tracking until today, actually. No, no, XTT is almost a year old. I actually was tracking this. I've got to update my spreadsheets. Yeah. Um, yeah, last March. So they're actually over a year old. What's this here? Oh, this guy new to our Discord here. He's talking about different funds here. Let's see. Oh, that's Walmart stock, GPIQ. Oh, these are like, I guess, his funds that he likes for income. Okay, well, we're not going to go too long today. I don't know why we have a picture of cats eating red meat. That's weird. This guy's kind of hold on here. Oh, I never sent this. Oh, it was having me edit it. Okay, let's see here. Coffeeholic says I sent another tip on Zelle. I should have sent there so YouTube doesn't take a commission fee. Oh, that's okay. You know, some people love taxes. I prefer my tips to go 100% towards content creators. Well, you know, you're a good guy. Appreciate you. By the way, that stock we were discussing, it got hit hard today. Um, the pharmaceutical one. I'm not sure why, but I have faith in it long term. Oh, let me go back to Yahoo real quick. I have faith in it long term. If I'm a growth investor, do I get paid when the market is going down? Yes, I do, because I'm actually so diversified. I would call it the THB empire. So I get paid. So believe it or not, I haven't shown this either, but I have a pension. Now that's fixed income, so that's like 4% a year. So I get paid monthly on that. That's like a dividend too. I get paid dividends. I get paid from the pension, and darn, I wish this wasn't. I wish this didn't share my whole screen here. Next video, I'll try to show you all the pension and stuff too. That's weird. She's got an onion in her foot there. Okay, the next thing I want to look at, we were talking about this pharmaceutical stock. Um, let me see here. Drawing a blank. Oh, thank you, Coffeeholic. Big spender. Hey, better than nothing, right? Okay, so let me see here. So yeah, XDTE, that's pretty crazy that it's outperforming, right? That's a rare diamond in the rough, as we say. Okay, let's see here. Gotta look at my emails here. This was March 25th. Oh, ANI Pharmaceuticals. So something happened today that caused them to tank. So ANIP down 5.88% today. So I have call options on this one because I'm expecting this company. I've been studying them, and I'm expecting some possibly good news here. They were doing really well up until today. I'm not sure what happened. There must have been some news that came out today, so the news wasn't so good. Getting dividends every week. Yeah, I own some XDTE and QDTE, so I'm getting the weekly dividends too. Um, I don't know if I would. What would I say here? I did have to sell some because I had to come up. My goal this year was to start a business, so I had to come up with some cash. That's the only downside. When you have to sell stuff at a loss, it really sucks. What's Coffeeholic saying? Are there ETFs with strictly just medical? Yeah, I think so. There's a whole sector of the S&P. I want to say probably XLM or something like that. That's like all medical. Some of that will have several medical funds on it. There was a company called Medtronic that I looked at several years ago. Medtronic. So to this commenter here, I would say it's nice when the income is coming in and when you have no NAV erosion. Um, that makes it good. But when you have NAV erosion, it kind of defeats the purpose. So Medtronic has been pretty much flat. It's kind of sucked. Why is 10 years locked? That's stupid. You know, I put that stupid seeking alpha thing in here, and in my videos, I mean, and that's weird. It's like locked for this one. I've never seen that before. Analyze with AI. That has to be an upgrade. I knew it. That's an upgrade. Um, okay. So ANI Pharmaceuticals. Let's just Google this real quick and see if there was any noteworthy news. Let's see what happened here today. They announced. Oh, this is 14 hours ago. Huh. Nothing significant, so I'm not sure why it dropped. Is ANI outpacing its medical peers this year? They're to present at RBC 7:45 a.m. Okay. Yeah, Tesla has major NAV erosion. So to be clear, I'm holding the bag on that one. I'm too stubborn to sell. It's got very significant NAV erosion. Like if that thing was a beach, that thing's gone, basically. You need to distinguish minus the H. NAV erosion from the market is down. I'm not sure what you mean. So, yeah, when the market is down, well, and that's been my biggest criticism of YieldMax, okay? So it was all cool. Well, I wouldn't even say cool because a lot of them were dropping anyway, but like November 22 when they first started going public, the market went on a huge bull run. Since then, we're in a bear market right now, so it remains to be seen how many of these funds are actually going to survive a bear market. How will market crash affect the dividend from YieldMax ETFs? That's what we're seeing right now. We are in the live case study right now. So NAV erosion happens even in bull markets, which I've heard the argument too. It's like if you're down, like, to someone like Kumair, when we're in a record bear market, and if you're down, that's pretty bad, I would have to say. Okay, I'm not going to go too long here. I see somebody joined the voice chat, but I'm not going to go. Oh, we have someone just joined and left. Hey, Marsh, thanks for joining. I'm about to wrap up here. We're just talking about like NAV erosion and stuff.
Oh, no worries.
Yep. So, did you buy anything today?
I bought some, let's see, SPY Eye, because I buy every time it dips.
Mm-hmm.
And at the end of the good thing is it looks like my calls are back in range because
For
I had
what?
sold calls on NVDL
Mm-hmm.
at the yesterday when it ran up. And
Yeah.
and then all morning I was like, oh man, I hope it doesn't just keep running up.
Right.
But it dropped back down, so I might buy to close for a couple $100 profit. I don't know. I'm gonna see what it does tomorrow.
And these are calls on the SPYI.
No, on the NVDL.
Oh, NVDL.
Because I have,
What was your strike
yeah,
price?
400. Oh, like, well, for the calls was $29.
Oh, okay. So like right at the money.
Well, yeah, but I sold it yesterday. I sold it yesterday. Yeah, yesterday, kind of when it popped in the morning
Mm-hmm.
for about, I got about 1200 in premium.
Oh, nice.
And then, yeah, I just needed to go down a little bit more, and then I can probably get maybe $600, $700 in profit.
Uh-huh.
And then I bought SPY Eye today. I'm trying to check my history.
Mm-hmm.
Hold on, let me check my transaction history. So
My account got hit hard again today.
I bought some NVO, North Disc, or whatever it is, that medical company. I actually got a dividend from them today too, which is weird.
What's the ticker?
NVO.
NVO. Oh, Novo Nordisk. Okay. Do
Yeah,
you
yeah, I bought some.
do you follow like a stock alerts service, or you just find these on your own?
Uh, I watched this. There's this one guy. He's like trading fraternity. Stock Market Live on YouTube. I watch him kind of throughout the day because he tracks it. He watches in real time the stock market going up and down.
Okay.
So I bought some of that, and then I bought SPY Eye, one share of Main Street Capital,
Mm-hmm.
and that was it. So I bought 5 shares of SPY Eye at 43, one share of NVO at 62, and one share of Main Street Capital at 49.25.
Okay. I'm gonna look on here. I haven't been looking at the NVDL premium for a while because I've gotten assigned a couple of times. I expect though, when the market does recover, we're gonna have a full recovery in NVDL. Um,
Oh
but
yeah, I think so too.
for the time being, I haven't looked at buying puts or
Oh, it's
selling.
at 27 right now. Oh, I didn't know that.
Oh,
I
so
thought it
you're
was still
probably
closer to.
so your puts are
Yeah,
in the
I'm
money
probably.
then.
Yeah, I can probably close my position tomorrow.
Yeah. Oh, so if you
I
were at
thought it was
20
still.
29, are you taking a
Yeah,
loss?
that. Well, no, I sold the calls, so I didn't sell puts.
Oh, so your cost basis is around 29 then.
Yeah, I sold calls at 29. No, my cost basis is 62, but I was, I kind of took a risk.
Right. I did too, actually.
And I got assigned high tide today. I got assigned quite a bit of shares.
That happened to me too, because yeah, high tide's been dropping a lot.
Yeah,
Dang, the
so now,
premium, the premium on this isn't as juicy as it used to be. Um, if I was to go to like 30, Yeah, the further out you go, like if the market was gonna like roar back, I mean, it's really tempting to go, out of the money on these. I mean, it doesn't take much of a run up in Nvidia for this to get back to like say 35 or 40, but uh,
Oh,
I'm
yeah,
I'm taking less risk now.
yeah. I kind of so I'm holding for my NVDL is down 14K, but I've gotten about 12, maybe 11K in premium so far.
Hmm.
So I'm like maybe total down 3,000 if I were to close it.
Okay.
But I don't know what because I don't know what the taxes would be on that though, because it'd be the
Options tax.
$14,000 yeah, and then
Yeah.
options tax. I don't know. So I'm gonna wait for it to recover, and then
Do you
I'm gonna
um do you
sell
still
calls on it.
use Schwab?
Yeah, yeah.
Okay. Yeah, so like I've been cautioning people, like last year was really well in terms of dividend income, but this year the projection's down like to 20,000 for me because they told me that the dividends for YieldMax are not sustainable enough. So they're only projecting me like 20,000 for the year.
Yeah, I'm projected at 13,000, but I closed all my yield max back in February, so I don't have it anymore. All I have now is SPY-I, QQQI, IWMYI, or it's like all the NEOS funds.
Okay.
In let's see, I have Main Street Capital, SPY-I, QQQI, IYRI, IWMI,
Okay.
and TLTW, but I only have 100 shares of that.
Hmm. Is that the like treasury one?
Yeah,
Yep.
it's the iShares 20 plus year treasury.
Yep.
It stays very flat.
Hmm.
I mean, it'll go up and down. It'll be up $30. Like I have 100 shares, so it'll be. I mean, it's super flat.
Yeah.
It'll stay between like 23 and $22.
Hmm. Yeah, I've never gotten into that one. Anyway, let's see here. We got Viz joined. Welcome to the chat, Viz. Can you hear us? Oh, he might be muted. Um, anyway, well, let's see. I've been going quite a while here. Wasn't going to go too long. Um, so thanks everybody for joining. Think I'm going to probably
Yep.
call it there. Try to do this every day again. Um,
Cool.
yeah, still kind of mapping out like which hour is probably going to be the best. But anyway, I think that's going to do it for us for now. So thank you all so much for tuning in. Like, comment, and subscribe, and of course, join Discord, and we will see you all in the next one. Take care. Have a good one.
All right.
Yep.